today's report, the 4th of April 2025. So what's in store for us today? Right, today I'm talking about Trump's April 2025 tariff announcement impact. Now, yesterday, April 2nd, 2025, President Trump unveiled new important tariffs on 90 countries, declaring it Liberation Day for US trade. Starting April 5th, a 10% tariff will apply to all imports, with additional reciprocal tariffs from April 9th. For example, tariffs on Chinese imports total 34%, 20% for the European Union, 24% for Japan, 25% for South Korea, and up to 46% for Vietnam. Now, this unprecedented surge has triggered intense response. So here's an analysis of the next steps, market impacts, and economic implications. Now, the first thing, expected next steps, US actions and global response. Now, President Trump characterized the tariffs as the start of a new era, invoking national emergency over trade deficits. The White House signaled it is open to negotiations with individual countries, implying these steep tariffs could be adjusted if trading partners come and negotiate to lower the rates. Now, most of the countries so far have chosen to the negotiation path, except European Union, mainly Germany and France, and of course China as well. But let's see, because it's probably, I believe, negotiations will happen, and every country will try to come to a consensus, right? The administration also warned that these tariffs will mark a cap, okay, unless countries choose to retaliate, suggesting further hikes are possible if a full trade war ensures, right? So bipartisan concerns in Congress has led to symbolic rebukes, particularly for Canada, but no immediate legislative actions are expected. Now, going forward, Congress may hold hearings or seek ways to limit the tariff powers, while the administration will face lobbying from industry seeking exemptions. Financial markets reacted swiftly and will likely remain volatile. The tariffs announcement immediately unleashed turbulence across the world markets, with stocks plunging and investors flocking to safe havens. Now, analysts expect continued risk-off sentiments until there is a clarity on trade negotiations. Central banks may step in to counteract downside risk. In fact, US Fed funds futures began pricing in about 75 basis points of interest rate cuts this year in anticipation of a growth slowdown. Now, CME Fed Watch 2 is pricing in a first rate cut for 2025 on 18 June, and this is followed by further cuts in September and December. Before this, the CME was just only showing 50 basis point cut, and that has increased to 75 right now. Now, global policymakers, particularly in Asia, are planning responses, with the European Union preparing retaliatory countermeasures if follow-up negotiation fails. Okay. Now, the second part is the dollar index, the short term versus the long term. So how is it going to be? Now, US dollars initially declined due to trade war fears, with the expectations that tariffs would slow US growth and prompt Fed rate cuts. The US dollar safe haven status was challenged as investors sought alternatives like the yen and gold. Now, if the trade war accelerates global economic stress, the dollar might eventually benefit from flight to quality flows, but be warned that the dollar dominance is no longer a sure thing when US policy becomes a source of instability. Okay. If the US policy, the US becomes a source of instability, the dollar, cannot take for granted, dollar will always survive this every time. So in practical terms, further escalation could invite some countries like China to reduce reliance on the dollar in trade, and if the US inflation rises while growth stalls, a stagflation scenario, the Fed may cut rates aggressively, both factors that could weaken the dollar value over time. Okay. As for the US stock market, the short-term shock and sector outlook, the S&P 500 and Nasdaq futures dropped significantly, with tech stocks most affected. Apple lost 240 billion in market value, and tech firms reliant on global supply chains saw sharp declines. Now, as you all know, Apple, among all the tech stocks, Apple is affected the most because of the nature of its business, that it's truly global, and yeah, it is mainly affected in that way, right? But if you want to talk about 100% effect, I believe that, Apple can actually bring back the manufacturing back to US, and based on its fan base, right, its strong fan base, it could in a way withstand this thing, the way that I'm seeing it, and there's a possibility it can withstand this headache that it is facing at the current moment. Anyway, let's jump and look at the most impacted sectors first. Technology, electronics, and semiconductor firms face high import tariffs and raising costs. Manufacturing autos, high import costs, and potential retaliatory tariffs from foreign markets. For the agriculture, US agriculture is vulnerable to retaliatory tariffs, particularly on exports like soybeans, and consumer retails indirectly affected by high imports due to 10% baseline tariffs. But in the longer run, the stock market's trajectory will depend on whether these tariffs are a negotiating tactic or a new normal. If trade negotiations lead to some tariff rollbacks or exemption for key products, market could rebound as clarity emerge. That's the one that we don't have at the current moment, right? Because we don't know whether these things they're going to retaliate or not, right? But most important thing, this is the key question: is tariffs already priced in or not? Now, there was some anticipation of tariffs before Trump's announcement, with markets showing signs of concern in the weeks leading up to April the 2nd. The Nasdaq has fallen 12%, and currency traders adjusted positions, with the US dollar shifting to net short. If you remember, even in our report, we were looking to sell the dollar, right? So while markets expected some tariff actions, the scale of Trump's package surprised investors, leading to an immediate repricing and increased volatility, because there was really a big impact of what we saw. Okay, as a whole, not to some countries, but we're talking something as a whole. With uncertainty over whether further escalations or negotiations will follow, market volatility is expected to remain high in the short term. Okay. So what's the likelihood and nature of retaliation from affected countries? Retaliation is highly likely, with most major trading partners condemning the US move. The European Union has already begun preparing countermeasures, including tariffs on US exports. Like I mentioned earlier, the two countries, France and Germany, okay, mainly from the European Union. Now, China is also expected to retaliate, particularly targeting US agricultural products like soybeans. A cycle of tit-for-tat tariffs could escalate the trade conflicts, increasing costs and uncertainty for businesses and consumers worldwide. Okay, so as a conclusion, I'm going to look into this, basically the short-term and long-term overall. If the trade war were to remain minimal, and major economies such as China, the European Union, and Japan avoid retaliating harshly against the US tariff, we are likely to escape a full-blown market meltdown, but it could still cause some significant volatility, downward pressures on earnings, and disruption in certain sectors. Now, the longer term, while a minimal trade war might prevent a complete market crash, market corrections and sector specific declines could still be plausible, okay, in the longer term, based on the the ongoing situations that we're seeing and the unpredictable nature of Trump. Therefore, caution in the market and volatility in asset prices remain significant risk even in the case of minimal trade conflict. So you need to be very, very careful and stay tuned to the situations. Now, this is not something that it's foreign to us. If you have seen the stock market move during Trump's first, you know, first time as the president, you have seen very, very volatile movements of the stock market, big swings. And the same is expected in this term as well. Okay, so this is not something foreign to us, but it's good for traders. And for every crisis that we are facing, there is always an opportunity, and the current opportunities that we are looking at is the cheap tech stocks. Okay, so we'll be looking into these stocks later when it comes to the charting. Okay, so with that, that's a report for today.